Well, here we go. The roller coaster has reached its peak and is now heading down that first hill. Lots of volatility in the markets, needless to say. The euro versus US dollar and the pound versus US dollar are sharply higher, and the dollar versus yen is lower. So I guess that means a lower dollar in trading here today after the Trump tariffs were announced yesterday and go into effect today. So let's talk about the technicals that are driving these currency pairs. I'll try to. So let's get started. We'll start off by taking a quick look at the hourly chart. And yesterday we saw the price action move above and below this swing area right through here. We had the tariff news, and the euro versus US dollar went lower initially. And where do we find support? Right against the 100 and 200 hour moving averages, just for giggles. And it'll show you that. And then since then, it's been a moon mission to the upside for this currency pair. Taking a look at the 4-hour chart and looking back in time, because we have to. The price extended above this swing area through here, which was a swing high right through here, swing high right through here. We rotated above that level, came back down toward this area right through here, found support. Buyers moved higher, came down to this area, found support, then broke through it, found resistance here before moving to the downside. So that this area is, well, you know, it's a long way away, but it's right around the 110 level. So keep that level in mind going forward. We're currently trading at 110.77, as a matter of fact. The price also moved above this swing area here. I'll get rid of these arrows here to show the significance. And again, this is a 4-hour chart, so these are weeks in between these dashed lines right through here. Found support, found support, found support. That was a nice floor, broke through the floor, made a ceiling, then above and below it. Now, admittedly, it's above and below it, and the market's trying to figure out which way it wants to do. We know that because at the highs right through here that we saw in 2024, we had high. So the market, had that ceiling up there, and when you have a ceiling up there, you come down to support, which is a 100 and 200 bar moving average, and then move up and come down and move up. Finally, the market broke through that area right through here. This area comes around the 111.04, and we moved above that level, increasing the momentum, and now we're both below that area right through here. So we're in between this swing area up here and this swing area down here. The market's going to, after the sharp move to the upside, the euro is up 2.13%. I don't know how that relates to gains in the past. I'll look at that and post that on the in the post, but we may have seen a limit as far as the euro versus US dollar goes. By the way, the tariffs on the EU, we had 10% base imposed on all foreign imports. That was prior. An additional 20% was added yesterday for the EU for a total of 30%. There's steel and aluminum tariffs of 25% for all countries. So those are tariffs on the EU. They got to work through that. They got to get through that without going into a recession in their country. While they're, the good news, or maybe, I don't know, is that fiscally spending, that's going to be up because they have to pay for defense. So we'll see. But the dollar is moving lower, helped by sharply lower yields as well. They're down about 10 basis points currently at the moment, 10-year yield. Let's take a look at the pound versus US dollar. And let's for giggles look at the hourly chart, and you can see on the hourly chart after the tariff announcements at the beginning of the day, the market moved a little bit, moved higher and then moved lower, but held above its 100 and 200 bar moving average. In yesterday's trade, we did move above those moving averages right through here. Anyway, that started the rotation back to the upside. Let's get back to the 4-hour chart and focus on that. And if we look at the move higher in this currency pair, we had another swing area similar to what we saw in the euro, where the price traded higher and lower, but had some similarities around this area between 131.11 and 131.44. Keep that level in mind. Currently trade at 131.77. That 77 is a magic number this morning, isn't it? On the on the top side, again, this is a 4-hour chart, so these are levels that of significance. We did try to break above this level here, failed, and then came back up to it again, and then we finally broke to the upside, rotated back to the downside, moved below the moving averages. I'm not sure this is the best of levels, but 132.30, it's something to look toward. Maybe this is the the bias defining level for the pound versus U.S. dollar as we use it to as a ceiling before moving to the downside. So as long as the price remains above this 131.14 to 44 level, the bias remains to the upside. If we break below that level, then we have the potential to move back down toward this swing area at 130.44 to 130.58. Sometimes you just say if the price can't go below this level, it's going to move higher. By the way, in the UK, they have that 10% baseline tariff on all imports, and then they were spared additional reciprocal tariffs due to the agreement with the post-Brexit that got rid of tariffs. So steel and aluminum, they have 25% tariffs. So they, there's sort of a reason that the pound versus U.S. dollar is moving to the upside. More so than the euro, with the additional 20% added yesterday. Finally, let's take a look at the dollar versus yen. Saw a lot of cars in the U.S. We have the 25% tariff on autos going into effect from any Japan car imports. So on the hourly chart, we moved sharply to the downside, fell below the, despite those tariffs, the dollar's moving lower because the yields are moving lower. It's right or not, I don't know. But technically speaking, if the price has broken through the previous low for this year, that previous low came in right here at the 146.537 level. Currently trading at 146.20. So just off the bat, that level is going to be a barometer for traders if the market can't make a break to a new low and stay below that level. Then there's a potential for a move back to the upside. That move back to the upside may take up to this 147.20 to 34. Maybe it's a little higher because of this low right here. So be aware of 147.20 to maybe 147.45 as a resistance on the top side. I'll adjust that, and if we can stay below that level, the bias remains more to the downside. If we move above that level, then we might start to see more short covering on the top side for the dollar versus yen. Let's take a look at the daily chart to see where we are in regard to that. And we don't need to see that much data here, but in the off the daily chart, we are. Let's do this one right here. There we go. That's a better picture. We are below 61.8% retracement. That comes in at 146.94. Maybe that's the best level to stay below. If on any sort of corrective move, if we move back above that 61.8% retracement, that would be problematic, perhaps from a technical perspective for the dollar versus yen. So keep that level in mind. So there we have it. I'll look at the three major currency pairs as best as I could on this volatile day. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.